G'day guys, welcome back to Mango Invest. In this video, we're just going to recap the previous week. So we're currently sitting at $288,000 USD. In the last trading day, we were down by just over $3,000, which makes the total profit being just over $23,000, which is totaling just under 9% there. The current cash position is sitting at just under $2,000. That's largely thanks to a rather large deposit that I've just done there. We'll just have a quick look at that. So just depositing $1,259, as well as just down below seeing some recent dividends coming in there from Microsoft, which is always good to see. But the major factors affecting the portfolio this week, you've just heard the release of the new iPhone 15 and the Apple Watch. Which investors weren't really happy about that because there weren't much changes. People were arguing that it looks exactly the same and there's no differences. This is coupled with Apple trying to take all their or most of their iPhone sales out of China and place them into India to diversify because of the China and US tensions. It's all a big bunch of speculation, which is contributing to a downturn in stock price, but the way I see it, it's still a very good company. I'm still going to continue to invest. I'm just waiting for that stock price to reduce just a little bit more, but we'll just have to wait out for that one. Right, another one, Alibaba. Let's just see the last month. Down by 4.85%. It's always going to be a volatile sort of stock, especially in this type of climate. But moving down to Realty Income Corporation, which is one of my favorite dividend investing companies. If we were to look at the 3-year period, you can see like a massive sort of downturn in August of 2022, and then even just recently in July and onwards, we've gone down a fair bit. So generally, the high sort of stock price was sitting at $74. We're now down to $54. Which is extremely low. If you go back to the 3-year period, you're down to $56. In that most recent downturn to $55, and we've now reached a new low of $54.10. So you may think that that's fairly concerning, but when you dive down and you see what is actually happening, I'm sure the interest rate situation is still affecting it. The situation or the economic environment in the US is still affecting the real estate stocks here and there. But if you look at macro trends and you understand and look at the fundamentals of the company, there's actually a couple of extra things that are happening. So if you look at the shares outstanding, you can see from 2022, we've had a massive increase in the amount of shares that the company have sold off. So, this essentially dilutes everybody's shares. It reduces the shares of value because there's more being pumped into the share market, which reduces the price. Although that just goes down to the goal in which, why you invest in Realty Income Corporation in the first place. Do you really care about the stock price fluctuating, increasing in value over the time, or do you care about the consistent dividends that this company offers? So, you've got a 5.56 starting dividend yield. Every year they've been increasing that dividend for 25 years consecutively. So realistically, to me, this just seems like an opportunity to buy more shares at a cheaper price, therefore, increasing my dividend income every single month. If we were to look at the dividends, let's just click in the dividend filter here. We're just going to scroll down until we see our last dividend from Realty Income Corporation, and here we are. So $89.89, and this is monthly. So, and let's just scroll down again just to see the consistency of this. In July, $89 again. All right, let's look at the previous month. Again, $89. And scrolling down to May, $81 there. So you can see how consistent those dividends actually are. And just seeing the stock price recently, with the cash that you see in the portfolio at the moment, I'm going to straight away put into Realty Income Corporation. I'm going to put that cash straight to work and get that money working for me. One more on the annoying side of things within the portfolio. You can see I've inherited a GoPro share here. This is a result of one of a member that watches my YouTube channel has used a referral code ChrisM965 when they sign up with Stake. They got a free stock. I got a free stock being GoPro. It's free money. Why wouldn't you do it? Although because the value of the stock price is $3.54 or $3.54. like I usually like to sell that stock so I can put that money, into use to a company that I actually enjoy. But whereas because of Stake have now introduced, a $3 fee for every time you buy and sell a stock. If I was to sell this, I would have a fee of $3, meaning I would only really inherit 54 cents. So I'm kind of in a bit of a predicament here. Do I keep it? Do I sell it for that 54 cents? GoPro, I'm not really a fan of the company. It doesn't really do anything for me. It doesn't produce me any dividends. So it's a weird one there. But drop a comment down below on what you think I should do with the GoPro stock there. But that just goes to show how hard Stake have actually made the dividend investing or the trading community a little bit harder. I know ComSec and NabTrade offer fees for every time they buy and sell a stock. But when Stake did offer the free trading, it did it make it easy for traders. Like if I had $10 in the cash account, I could spend $10 only without having the thought of having to pay $3 just for buying the stock in the first place. But let's just say you wanted to sell McDonald's, seeing that I've got a $3,000 profit there. If I was to sell all those shares in order to get the profit, it'd cost me $3. But with that money and with that profit that I've just generated to try and put into more dividend paying companies, I'll then have to pay another $3. That's $6 just from moving your money from one company to the other, which is a little bit annoying. It may not seem like that much, given that is a $3,000 profit, but consider you buying and selling and doing maybe 1 to 2 trades every single week, 5 trades every single month. That money quickly adds up, and it's just not very appealing there. So this is the way in which this has changed, how I invest, because I want to sort of avoid that $3 fee every sort of, because I want to try and avoid that $3 fee, as best I can. All I simply do is just wait till this buying power, increases to $2,000 to $3,000, and then only buy, the one company at the time. So instead of, putting $500 in Apple, $500 in GoPro, $500 in Alibaba, I'll just simply put, a big sum of money in just to the one company, only incorporating that $3 fee. So it doesn't really seem like a big hit. But as always, guys, if you did enjoy the video, give us a thumbs up and subscribe to the channel. And if you did want to sign up with Stake and get a free stock, just type in the code ChrisM965 and you'll get a free stock when signing up with Stake. And then you can sell it and then choose to, use that money in whatever company that you desire. So thanks for watching, and I'll catch you in the next video.